Good morning, traders and investors around the world. Sorry about the late start here to pre-market prep plus. Joel Elconin here this morning on this Friday, March 4th, to end a very, very turbulent week. Let's run down the futures markets here and take a look at what is going on and what that will mean for today's session, and bring on Sean Udall here just in 1 minute. He'll be joining us. S&P 500 index futures are trading down 44.75 at 43.14 and a half. Crude back up near the highs, heads up 390 at 111.62. Gold, that's up 13.50 at 19.49 and a half. Silver up 16 cents at 25.38. Bitcoin down 895 at 41,185, and Ethereum futures are down $90 here. So do you have me here, Jar Jar? I hear you said standby. Can you guys hear me and see me? Just give me a one if you can. And let me see if I can find Mr. Udall here. Okay, Born to Free says he has me, and I'm waiting for Sean to come in here. Sorry about this, folks. All right, folks. Really rough start here on this March 4th edition. We did run through the futures markets and was trying to show Sean some screen share capabilities, and I guess that wasn't the greatest idea to do here.
I don't know if that messed us up though, but who knows? Maybe
All
it
right,
did.
sir. We got you here. Why don't you just talk to me? I'm going to stop the screen share here so everyone can see you drinking your coffee and enjoying this morning. Groundhog Day, Sean.
Yes.
Yeah. So why you calling? I think I know why, but why you calling this Groundhog Day today?
Well, so aside from it being one of my favorite movies, really of all time, I love that movie,
Really?
and it carries well. I probably watched it again 2 or 3 years ago, and I mean it's got to be 20 some years old now, and it still works. It still works pretty darn well. So, I mean, man, this is Groundhog Day. I think you and I remember '08. We remember 11. We remember 2016. I have written a ton in my feed about how uncannily and how eerily similar this is to 2016. Now, that said, it's a lot worse than 2016. It's a lot crashier than 2016. There's a lot more stocks down 50%, but it's the exact same pattern. And it is a bear market pattern. It is a grind amount pattern. It is a pattern which those who survive will end up making an obscene amount of money. But the obscenity gains, I like that term. I just thought of that. The
What was that
obscenity
term?
gains, the obscene.
Yes.
So the full obscenity gains, full triple X obscenity gains, take about 2 to 3 years or more. So I'll give you an example, and you might, I shared this a lot with subscribers, but we have a lot of people listening to this who aren't my subscribers. So I talked a lot about stock. The symbol used to be Ruby. Name was Rubicon. It's now MGNI, which is Magnite. So Ruby was a stock. I think I first bought it 50% below the IPO price, which I'm gonna say was like 8 to 10. And by the way, it might be more because it might have hit like 25 post IPO, but I think the IPO priced at like 18 to 20. So bought a little there. Months later, bought a little more at 5. Months later, bought a little more at 3 or 250 or 3. I have no idea where Ruby bottomed because I don't know if it shows on. It probably should show on the MGNI
What's the
chart.
symbol? What's
MGNI? MGNI.
Okay.
So let's just say it bottomed at $1.50. It might have been 80 cents. So here's what started happening to them. They started having really good reports. And it's not like they had terrible reports, by the way, even at lows, but it was just a stock that literally had zero liquidity. So in this market, and you have Dennis have talked about this a lot, and I've talked, basically stocks that don't have liquidity is really hard to find a bottom until the whole market, until everything has reached the bottom. So this market is all about liquidity. Stocks that have liquidity don't act like we're in a market crash. But everything else that doesn't have liquidity, which is about 80% of most stocks, basically, if you're not a large cap stock, you don't have liquidity. So you're basically in a crash. But the whole point is, so yeah, could you trade Ruby back then? Could you buy it at 4 and sell it at 5 1/4? Sure. But you know when the big money was? I'm going to say big money is basically 5 6 baggers huge. So that probably took like, I'm going to say sometime in 17, 18, I think it finally got to like $10 and held over 10. It did start working as a pretty good trade once it started hitting $8 and higher. But I literally sold most of my Ruby at $36. So that took 4+ years. So I would say the market we're in, I almost call this an accumulation market, where companies that have cash flow, human beings that have cash flow, you keep putting money in the market, you keep buying the best growth stocks at heavily discounted prices. By the way, I'll bring up Twilio, Okta, Mule, Coop, COUP. People forget those were all pretty much hated, super high growth stocks, hated stocks You had a year to buy all those stocks, maybe even 2 years to buy those stocks under $30 a share. I know, because I owned them all. And I really screwed up on Twilio. Some of those I hit better, and some of those I hit really good. But Twilio had nothing but great reports for like 4 quarters in a row. The stock would go to 36 and it would go back to between 26 and 30. So that was also a phase where growth wasn't loved, but that's basically where we are. And so the big gains are, this is not going to be a COVID thing where all of a sudden there's a solution and stocks go up. It's just not. In a way though, I actually think this is good, because anything that happens that returns the market to normal or more normal, to me is good, because the more normal things get, even if they're bad, I'll make plenty of money. The hardest markets for me, and I think for most, especially experienced traders, are when things are just highly abnormal and nothing really works. Historical things don't work. Valuation levels that were always rock solid don't hold, et cetera, et cetera. Anyway, so the whole circling all the way back to Groundhog Day is we could have had this exact same discussion at the December lows. And then we could have had this exact same discussion at the end of December. We may have similar. And then we could have had the same discussion at the January lows, et cetera, et cetera, et cetera. So, there are things that are changing under the surface, just like I was saying in September, October, November, when the indices were still high. I'm like, there's a lot of stuff changing on the surface. And I do think you interviewed maybe I think you said 1 or 2 other people that kind of saw some of the same things I was seeing about how much damage that was occurring to the average stock and things like that while the indices were holding highs. And that ended up being a precursor to what we're living through now. So now there is stuff happening under the surface. There's fewer stocks making lows. There's not anything making highs, but there's fewer stocks making lows. Again, these sentiment things keep piling up. Here's what I'm afraid of. I'm afraid of we might need to get to a point. Well, this would almost be good. We might need to get to a point where you get so much bad news in a short period of time. It's like an overwhelming amount of bad news. And it literally like swamps the quants. In other words, it's the quants, it's really easy to target stocks and target the market and create a sell-off when you only have 1 or 2 bad news items to focus on, because you can magnify them. When you have 58 bad news items, it doesn't really matter, because most people are like, I'm done selling stuff. Maybe I'm not going to buy anything, but I'm done selling. And so I'm just going to start living my life again. And stocks are going to come back when they come back. That is called apathy. So in a normal bull, old school bear market, usually you bottom at apathy. So any comments? Did I lose you?
No. Let's no, I found, the psychology. Before we get
it's a very psychology driven
psychotic psychology
yes,
too.
Absolutely.
Before we would go in, the SPX, you were talking about the S&P cash, right? Is that what you were referring to?
Yeah.
Okay.
I always refer to S&P cash.
Before we do that, a quick comment. You have a geopolitical situation right now.
That's right.
And so, with, I don't want to get into a whole talk about COVID or anything, but COVID was something that you're like, okay, we're going to come out of this, right? There's going to be, whatever, herd immunity, whatever you thought.
Vaccine
or no vaccine or herd immunity or just everyone, but this is a different situation because there's not like a medical, right?
There's no quick fix.
There's no herd immunity. So
nope.
How do you, before we go on to the cash indexes to some of your stocks, how do you figure that into your analysis?
Well, in some ways, again, it's almost easier because fewer things, we'll get to a point where fewer things start to matter. Meaning, and I'd like to say we're seeing this because it looks like we're seeing this, but what happens is we get 2 or 3 up days. Here's one of the biggest problems. This is total Groundhog Day. How many times has the NASDAQ rallied 1,000 points off of lows, but it doesn't see any follow through to stocks?
Yeah.
Doesn't hold. It's almost like it actually creates a lot of bear fuel. And so it does, because you go from, and it happens super fast. You go from like, I'm trying to remember what the first low was, 13.6 or something. It's way above where we are now. But anyway, the first low, you literally had an 800 point intraday turn off that low. The S&P, I think, had a 4 to 5%. So the S&P hit, I remember the percentages exactly, because I was wanting us to hit minus 15. We hit minus 12 and change, I think minus 12 and a quarter. And I think we finished that day only minus 7 or something. And the problem is, so the indices had this huge recovery, but you know, most stocks don't go up, but they've gone down 5 to 8 times the amount the indices have gone down. Well, they don't go up 5 to 8 times. You know, it's elevator down, escalator up. Again, that's a long-term market truism. So, but yeah, you know what it is, Joel? It's just surviving, waiting it out, buying a few things here and there when you think they're kind of crazy. Maybe there's a trade. I mean, the thing that I've been struggling with, and so I love to trade. The problem is, for me, this market is kind of semi untradeable. Now, the other problem is I get a great trade and I don't take it. So like, hey, my last buy in a firm was like 32.50, maybe 32.60 or something, but it was like really good. Well, you know, a very short time later, it was 42 to 43. I didn't sell it. So this morning, I don't know, it's going to be 38, 37. Is it going to retest 35? You know, I don't know. So, but that's the problem too. If you really like something, I mean, I'm not buying this to make 10 points. So 10 points is a really good trade. Do that 8 times. That's a lot of value. I'm buying this because I think it's worth 85 to 150. Like, I'm not, you know, so you have to trade partial positions is what I'm getting to. You have to do stuff where at least you sell stuff enough times that you have liquidity to trade or invest.
Okay, so, let's run down real quick. The good old S&P cash. I'm gonna rip through these here real quick. We're coming up on the open. I mean, they took out that resistance. Yeah, I mean, you know, 4,400 is my number. We took it out yesterday on that Iran headline. And the only thing I was thinking, are we going to close above there? And we failed miserably. So for me, that's still the line in the sand, 4,400. What are you looking at? S&P
well, I'm a
cash?
little more long-term out. So I say, I mean, here's what could be happening. I think 4,200 is the key number. But you look right now, I'm like, we're going to try to put in an inverse head and shoulders. The question is it going to hold? So you see left shoulders, 4,300, you know, the head. So we're going to try to do that. We're going to try to put in inverse head and shoulders. The problem is with those, you don't know if they've stuck until a little bit later, right?
Yeah.
By the way, there's a ton of charts that look just like the S&P chart. They just look way more extreme. Like the 2 recent lows are much sharper drops.
Okay.
Yeah.
Okay.
But anyway, I was going to talk about Nutanix and Splunk.
Let's do that. Yeah, we got a couple of minutes.
So,
let's do those 2 stocks, and then we'll call it a day.
Yeah.
Okay.
So Splunk has been in their own hate trade. You know, the CEO left. He had a ton of panic selling. The one good thing about Splunk is Splunk hit lows a lot earlier than lots of other stocks did. So, and they haven't had any bad corporate results. In fact, they're transitioning beautifully to subscription model. Greater percent, blah, blah, blah. Anyway, they had a very good quarter. That's one of the few stocks that's been able to fight the selling in the last three days. And then Nutanix, I think will end up doing the same thing. It will just be kind of a delayed reaction. But I actually liked, in some ways, I like the Nutanix report better than Splunk. It didn't have as much headline upside, but the underlying numbers for like ARR, cloud growth, all that stuff that software people and Nutanix, NTNX. So all the stuff that the cloud growth guys like, they had this, you know, in abundance. So there again, you kind of see it's an interesting kind of a potential chart pattern. It could be a W bottom. It could be an inverse head and shoulders. Again, though, it has to hold. And the one thing I still don't know, do we have to break minus 15% on the S&P? We got really close to it, but we didn't break it. We didn't really test it. So anyway, we'll just kind of have to see. The last thing I'll say, and this is what I'll close on, I don't like super hot economic data, especially when it just seems almost unreliable. But but like this really hot jobs number is not kind of what we wanted to see. So, you know, we already know the Fed has 25 basis points already in the cooker. So the question is, how many more are they going to add to that? I still think they're going to have a hard time doing more than 3 myself. But we'll see.
All right, real quick
on
this Nutanix. Nutanix, just this 28's a real stickler, right? Got there yesterday.
That's resistance.
Yeah, that's big. So if, you know, halfway back from this 23.5, you know, kind of got near the 50%. That's what I was looking on this one. Splunk had a good day yesterday. So I think best case scenario, you just chop around for a couple days and make another move. What I do notice on the Splunk, and if you want to get super bullish excited on this one, you made a new 3-month high here at 127.50.
You did. It didn't hold it, but it did pierce it, right?
Yep. So before I let you go, though, Bill wants to ask about Datadog.
I love Datadog as a company. I owned it. I sold it as one of what, again, I should have sold everything. That was one of my good sells. I don't really want to buy it. Like to me, if Splunk is 120s and Nutanix is 25,
okay,
you know, like why buy Datadog unless it's 100, 115 or something? I just think there's way better buys. So the company, I love the company.
Okay. All right, Sean, we're coming up on the open. Thanks a lot.
Later.
Folks, sorry about the delayed start. Back at 10:30 with stock odds. Everyone, we'll talk to you later on. Have a good day.